Hello again. We, in our first assignment, started looking at what a budget is. It's such a plan that it helps you be successful in your future. On this next assignment, budget assignment 2, we're going to look a little bit about the specifics that are in a budget. Revenue or income is the money that you have that's coming to you. It increases your value. When I get a paycheck from work, it increases how much money I have. When someone gives you a gift, it increases the money you have. If you would win money somehow, that increases your value. All those are different types of revenue. If you are a business like Kohl's or Walmart or Meijer, you have sales revenue. You are selling products, and that's how you make your money. So if you take a look at your definition of revenue here, it is money that you have that increases your value. It's money that's coming to you from different sources. I love to have money coming to me from different sources. Now, expenses, on the other hand, can be either fixed or variable. Expenses are when you spend money. You have to spend money. So if we looked at fixed expenses, they occur every month, and they're about the same each month that you get the bill. So when I get my electric bill, I know it's always going to be around $80 or $90, and it's going to come every month because the electric company bills every month, just like the water company does. Now, insurance bills every month. So I pay my insurance bill a little bit every month, because if I don't, it's a really big amount once every 6 months or so. So those are what are referred to as fixed expenses. Variable expenses are expenses that change in amount and may vary and may not be every month. So when you look at back to school shopping, that's a variable expense because it happens, usually August or late July. And if you take a look at Christmas shopping, that happens in November, December. Sometimes if you fall and break an arm, the medical bills, that would be a one-time bill. That's kind of a surprise. It's an emergency bill. That would be a variable expense. Now, the last 2 lines on here, I'm starting to gear toward your third budgeting assignment. You're going to put together a revenue sheet, so I will give you more information on that in the future. But net income is when your revenue is more than your expenses. So let's say that you earn $1,000 this month between gifts and working, and you only have to pay out $800 for different bills. You would have $200 left over. That's called an income. If you have a net loss, it's just the opposite. Your revenue is not enough. Your expenses are more than your revenue. So let's say you have $1,000 of income, but you have a broken arm that costs you $1,200. You would be $200 short. That is considered a net loss. On your assignment that goes with this, you have a sheet that you have to look at. In the first column, I put some examples of revenues and expenses. If it turns out to be a revenue, you just have to put a check mark under the revenue column. If it's an expense, you have to decide, am I going to get this expense every month? If it is, it's a fixed expense. Put your check mark in that column. If it is variable, like a gift or something along that line, then that would go under your variable expense. So you're going to put reoccurring expenses in your fixed expense, and you're going to put expenses that occur only once in a while in your variable. Have a good day.